Forget the crypto winter. Forget the doom charts. Right now as you watch this, SEI Network is making a move that doesn't just promise adoption, it forces adoption. We're talking about a partnership with Xiaomi, one of the biggest smartphone giants on the planet, to pre-install their crypto wallet on millions of global devices. This isn't just news, it's a structural earthquake for the entire DeFi market. The chart is screaming a bottom, but the fundamentals, they're screaming $1. The question is, are you positioned before the tsunami hits, or are you waiting to catch the foam? Welcome back to the channel. I'm your crypto analyst and professional chart whisperer, and today, we're diving deep into the one altcoin that has been boring us to tears for months, but is about to shock the entire financial market. If you want to cut through the noise and grab the alpha, hit that like button, smash subscribe, and ring that bell. This isn't if it pumps, this is when it blasts off. Let's get into the data. The narrative around SEI just flipped from a high-speed layer 1 for traders to a global adoption play. That's a massive shift in market perception, and frankly, a hilarious upgrade from Solana killer rhetoric to billions of users in your pocket. The core catalyst is the December 10th announcement, a massive SEI Network Xiaomi partnership. According to the official SEI Labs co-founder Jeff Feng, they're not just partnering, they're embedding a next-gen finance app powered by SEI, pre-installed on new Xiaomi devices. Think about this for a second. Xiaomi ships around 168 million devices annually. We're talking about potentially exposing 166 million users to crypto and stablecoin payments without them ever having to touch a traditional exchange. That's not a soft launch, that's a digital colonization of the emerging markets where Xiaomi dominates. The beauty of this is how it solves the onboarding problem. It's the ultimate lazy person crypto solution. You buy a phone, and your on-chain wallet for finance is already there. No seed phrases, no confusing decks, just simple, fast transactions designed for stablecoins. This moves the needle from speculative trading volume to real-world asset utility and transactional demand. Every transaction on those millions of phones generates fees for the network, increasing the fundamental value of SEI. According to a post by the SEI Network community leader, SEI Wizard, this real-world utility is already driving numbers. Just before the Xiaomi news dropped, SEI had already surpassed rival chain SEI in daily transactions, 7.2 million versus 4.6 million. The network is already humming, and now you're throwing 168 million potential users onto the tracks. That's like putting a rocket booster on a bullet train. Here's where the anxiety kicks in. Despite the world-changing news, the chart has been a nightmare fuel. Price action has been locked in a year-long brutal downtrend from those lofty $1.16 peaks. It's been a textbook example of suppression. The challenge now is overcoming the sheer weight of technical resistance. The SEI to USDT chart is currently sitting right near 14 cents, a level that has acted like, well, an industrial strength magnet for months now. A well-known trader, Michael van de Poppe, points out the critical technical hurdle here, the 20-day moving average, which is also hovering around 14 cents. He believes that a decisive breakout at this level could target 24 to 27 cents, which would, effectively double the token's value. That's a 100% gain just to get out of the basement, folks. But let's talk about the patterns that just scream major reversal. Arch Crypto Bull the 360 highlights the textbook descending channel that is, honestly, just about to break. This pattern, after months of price suppression, is the classic setup for a massive breakout. So, he's actually targeting 150 to 200% upside from the flip, which would take us to the 35 to 42 cent range. The biggest lifeline on the chart is the double bottom formation. Bitcoin Census explicitly shows this classic reversal pattern in play. We saw the first low in the middle of 2025, a rally, and now the retest right near the 13-cent support. This W shape is the market kind of waving a white flag from the bears. It means buyers are stepping in at the same price level twice, a definitive sign of structural demand. However, the real tension lies in the neckline. The key resistance for this double bottom pattern sits around 30 cents. If we get a decisive close above that on significant volume, that's your rocket launch confirmation. Until then, we are battling the gravity of that long-term crypto bear market hangover. We need to watch that 14 to 17 cent area like a hawk. It's the gateway. If the fundamentals, the Xiaomi deal and the technicals, the double bottom and descending channel, align, where exactly does this thing go? We aren't talking about, maybe 50%. We are talking about reevaluating the entire valuation model. The immediate conservative targets per technical analysts like Michael van de Poppe and Alacarts are initial target, 17 cents, which is breaking the immediate 4-hour resistance. Midterm target, 24 to 27 cents, which is Pop's target after breaching the 20-day moving average. Breakout target, 35 to 42 cents, the 150 to 200% move projected by Crypto Bull 360. But here is my own expert analysis, pulling in the massive user onboarding utility of the Xiaomi partnership. The most aggressive yet highly probable target is the original swing high and the symbolic $1 level. Sorryuzaki SEI explicitly highlights the expected recovery to $1 as the full utility of the Xiaomi deal, 166 million users potentially onboarded, plays out. This isn't just a technical pump, it's a fundamental re-rating. Okay, let's do the math on the double bottom target from Bitcoin Census. The textbook target, by adding the height of the pattern to the neckline, comes out to around 47 cents. But, interestingly, he annotates an even more aggressive target of 58 cents. So, why the higher number? Well, it's because the on-chain activity is already accelerating. Mark Sean Brown shows a 26% rise in SEI Network's chain fees over the past week alone. Volume is already flowing in. I believe the Xiaomi partnership, launching in 2026, acts as the ultimate liquidity grab mechanism. It provides the sustained demand needed to turn a technical bounce into a full-blown macro bull rally. 58 cents is a certainty once that 30-cent neckline breaks. From there, the road to $1, the old psychological and all-time high level, becomes significantly clearer as the market begins to price in the hundreds of millions of new DeFi users. We need to treat this as a multi-stage rocket launch, not a single ignition. The current price action is purely reactive to the news. We're fighting the immediate resistance at 14 to 17 cents, which technicals like the 20-day moving average are defending fiercely. Patience is the key here. The smart money is accumulating. When the volume comes in to shatter the descending channel and, crucially, the double bottom neckline at 30 cents, you see the real acceleration. That's when every analyst's target gets validated, and the crypto media lights up. My opinion is that the 30-cent breakout will be fast and brutal for the shorters, likely fueled by the early 2026 launch announcements for the Xiaomi integration. The market hates to wait, and they will front-run the adoption. So, the utility flywheel begins. As the first batch of Xiaomi phones hits the market in 2026, the on-chain data will start showing a massive spike in active wallets, total value locked, and transaction count. This is when the financial model for SEI flips from a speculative asset to a utility token, justifying the targets of 58 cents and beyond. The sheer scale of this partnership cannot be overstated. Jeff Fung is correct. They are reimagining how billions of users interact with digital assets. They are doing this through the most mundane but powerful tool, the stablecoin payment app pre-installed on your phone. We're seeing early Asia-Pacific recognition already, with SEI's Director of Business Development, Justin Barlow, being featured on Hangyoung TV, Korea's top economic news channel. This is mainstream visibility that most altcoins only dream of. So, my overall analysis is pretty clear. SEI is currently trading at a deep discount, anchored by old technical patterns, while sitting on a macro adoption catalyst that honestly justifies a valuation exponentially higher. The chart says bottom, the news says blast off. I'm betting on the future. Listen, you've stayed through the charts, the targets, and the Xiaomi bombshell. I really appreciate you trusting me with your market analysis. This SEI situation is unique because it blends a textbook technical reversal pattern with a genuine mass adoption utility play. We don't get these setups often, where the narrative and the data line up so perfectly near a perceived bottom. The current price range of 14 to 16 cents is, in my professional opinion, the last low-risk accumulation zone before the market fully digests the scope of this global integration. Don't be the one hitting yourself with FOMO when we're celebrating the $1 milestone. Thank you for watching. Hit that like button on your way out, and I will see you in the next one. Peace. The content of this video is for informational and educational purposes only and is not financial advice. I am a crypto analyst, not a registered financial advisor. Cryptocurrency investing is highly volatile and carries significant risk. You can lose all of your capital. Always conduct your own thorough research, your due diligence, before making any investment decisions. Never invest more than you can afford to lose.